The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 14th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside the Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on a fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we got quite a market out here. You got the Dow trading down 367 points, S&P 122, 524 for the NASDAQ 100, 70 for the Russell, transport's down 312, semis off 243, composite down 520, gold's off $106, silver down $2, light sweet crude up $1.46, natural gas down 19 cents. So we got a lot to take a look at out there. Where do we want to start? Let's go start with the intraday. Well, let's start here first. Let's start with the daily equity future contracts. What do we know, at least as of 11:08? What we know as of 11:08 in the morning is that the ES Mini and the NQ have gotten back inside their profile. Now, in the case of the NQ, it was testing and so far has rejected the hammer candle from November 7th out there. And as long as we stay, if we were to close below that level, and we could, 24,709 and a quarter, we would trigger an A to B equals CD pattern to the downside. We don't have that as we speak. Instead, we just have a consolidation with inside profile levels. The same for the ES Mini. Now, the ES Mini never got down to test the low of that November 7th swing point. But if it could close above that swing point, that's about 67.72 today, you'll have a test and rejection of a swing point with price trading inside its profile levels. In the case of the Dow is still below profile support out there. But you can see a nice little rising trend line that it found support at. We can draw that in here. It looks something like this. Give or take out there. So trend line support still in place. The Russell is the one that is struggling. However, it may not form a A to B equals CD pattern to the downside. The price point that you're watching out here for the daily time frame is 2386.60. And right now we're trading above that. If we trade above that, yeah, we'll be below profile support, but we will not have an A to B equals CD pattern to the downside. That's what's going on with the daily time frame charts. Now, yesterday we did have a one-day rate of change in spot VIX about plus 10%. So what we know is that we typically get a bounce or bottom in the marketplace. Let's go take a look at those intraday charts out there. And here, if we take a look at the NQ, the bottom was really forming this morning at around 9 o'clock. So let's take a look at that. When I say the bottom was forming, here if we take a look at, let's get back to the 10-minute time frame chart. So what you'll see right here at 8:50, you had a Rhodes Momentum Indicator bottom form on the 10-minute chart. Remember that time frame, 9:50. You had, at 9 o'clock, you had a Rhodes Momentum Indicator bottom form on the 15-minute time frame chart out there. On the 60-minute time frame chart, we had the completion of a TD9 count bottom at 9 o'clock this morning. Right now, we're getting a confirmation of an A to B equals CD pattern to the downside in the 120-minute time frame chart. The 240-minute time frame chart had a prior TD9 count bottom. That's been tested and rejected. We might get even another let's see, this bar closes at 2. So I can't tell whether we're going to get another TD9 count bottom or not. We don't need to. We have a Rhodes Momentum Indicator bottom. And on the 300 100-minute chart, the 5-hour chart, TD9 count bottom. Now, what's the key level? So what we're looking at out here is we're looking for some topping patterns or signals. You can see on a 10-minute basis, the TD9 count pattern was negated immediately. It tells you about a strong upward momentum move out there for its time frame. No topping pattern in the 15-minute because it's closing above, it's trading above its TD9 count breakout level. That's a bullish signal. The 30-minute time frame chart is above profile, no topping signal or anything there. 60-minute closed above its breakdown level of 25,118. That's a bullish signal. So the key levels now, if you watch the 120-minute time frame chart, that's where the next message really comes from. What I mean by that, this bar, by the way, closes at 12 noon. We can see that price was trading below the bottom of a bullish structured 120-minute profile for more than 2 consecutive bars. Counter trend moves would end at the center of that profile. That's at 25,138. If we close above 25,138, that means the move on the 2-hour chart was more than a counter trend move. The other levels to be watching are on the 4 and 5-hour charts. And those are the oscillator and change lines. Now, in the case of the 4-hour time frame chart, just like we looked at on the 2-hour chart, it's trying to get above and close above the center of its bullish structured profile. In order to do that, it just simply needs to close above 25,122. Now it needs to do that at 2 o'clock. So, and really what you really need to see at 2 o'clock is a close above its red oscillator and change line. Current print there is 25,183. And on the 5-hour chart, it's currently at 25,198. We know those numbers are going to change up and down. But you've got bottom patterns across the board here, even on the daily time frame. The bottom of its daily profile is holding. Let's go check out the charts for the ES Mini. They were generating the same kind of signals out there. So let's pull up those charts. And we'll begin the same way. We're just going to start from the lower right and go to the left out there, and you can take a look at the time frame. I suggest you use multiple time frames to see what's going on with an instrument. I certainly suggest you understand the Rhodes Momentum Indicator pattern. You understand the TD9 count patterns out there. If you don't know the A to B equals CDs, I teach those also in my workshops. Here, if you take a look at the 10-minute time frame chart, we got the confirmation of the Rhodes Momentum Indicator bottom at 850, matching with the NQ. We got a TD9 count bottom pattern that formed at 8:45. Rhodes Momentum Indicator 15 minutes later at 9. Rhodes Momentum Indicator bottom on the 30-minute time frame chart that was formed at 9 o'clock this morning. TD9 count bottom completed at 9 o'clock this morning. The 60-minute time frame chart. If we open up the 2-hour chart, I'm sure there's an A to B equals CD pattern to the downside. I believe there is. Not so much. It was just kind of a straight move to the downside. So what price is trying to do here for the 2-hour time frame chart, different than the NQ, just trying to get back inside its profile. In order to do that, 6760 is the number that price needs to close above. That's a 2-hour chart. TD9 count bottom would form on the 4-hour chart. It just needs a close below 6771. And there's no other A to B equals CD, but it was did not get all the way down to that swing point out there. TD9 count bottom, though, on the 5-hour chart. So the next key area of resistance to the upside is going to be 67.7250, the 60-minute TD9 count breakdown resistance level. Price can close above that I would say it's going to run for its oscillator and change lines on the 4 and 5-hour charts. Currently, 67.88, 67.90. being the numbers out there. So that's what's going on the daily equity futures, the intraday charts out there, the tools and patterns that you and I look at every hour between 11 and 12 noon. It's a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're going to go look at silver here in a moment. I'm just getting the charts set up. This is for Ben in Hawaii. And so we're just going to take a look at it. He's already taken action on his trades. He took a long trade in silver this morning, may be out of it at this stage here. So if we take a look at silver, and just go, well, actually, what I'm going to do here is I'm going to go to the weekly and the give me a moment here just to get up to those charts. So we should see the daily, weekly, and the monthly chart for silver here. So if you look at the, let's start with the monthly time frame chart. What you can see out here, Ben, is that we are in bar number 9 of a TD9 count pattern. It says you're going to get a top between this month and next month out there. It may be the end of the month. The weekly chart has a TD9 count pattern. That went ahead and formed on October 17th, the week of October 17th. It completed the following week. And that price has been tested and rejected at this moment in time. In order for silver to really get its mojo to the upside, we need to see a close about 53.765. The same is true with regard to the daily time frame. Yesterday, what price was doing was testing its Rhodes momentum indicator top. And that was at the price point of 53.765. Now, the daily time frame has a different hurdle than the weekly time frame. In order for the daily, and that's assuming that today's candle remains like it is. At this moment in time, we have a Three River Evening Star candle. All that needs to happen is price got to close midway, halfway in the distance of this candle from November 12th. I don't know exactly where that's at. It's probably around 52.25, somewhere in that range out there. But if we do get that, then what silver would need to do for a daily time frame is it would have to close above 54.41 in order to truly get its mojo back. And if price were to close below its green oscillator change line, then where price would target, Ben, is the buy zone. The buy zone is between 47.40 and 48.82. Now let's go take the intraday charts here, since we've had a bounce or a rally. So let's get to that set of charts out here. We don't have to go over the daily. We've already done it. 5-hour time frame chart here, as soon as it populates. Let's see what we find. We can see that price pulled back and tested and rejected its breakout level at 50.15. Same breakout level on the 4-hour chart. 2-hour chart looks like it's just a tad lower than that. It was at 50.86, but that level appears to be holding. TD9 count bottom on the 60-minute time frame chart, trading with inside its new profile. Price should rally up towards 51.74 to 52.06. TD9 count bottom on the 30-minute time frame. Price is above resistance, a bearish structured profile, and a oscillator and change line. It's got its sights set on 52.68. No topping pattern on the 15-minute chart. A TD9 count pattern that is going to go ahead, that is completed on the 10-minute chart. So if we see a close above on 10 minutes, 51.19, that's going to suggest a further rally. That rally would take silver up to 51.62. So at this stage here in a daily time frame, you've got a new profile that is attempting to form. I say attempting to form because it is on my charts out there, but we won't get a confirmation of that until Sunday evening at 6 p.m. But right now, that profile is below price, with the top of the profile being 49.67. That's a bullish signal out there for silver. So you'd have to say on silver, it's neutral because you definitely have a topping pattern, and at the same time, prices trade above its oscillator and change line as well as its profile out there at this moment in time. So, Ben, hope that helps you out. Friday would not be a Friday if we didn't go take a look at Rigetti. RGTI is a ticker symbol, so we already know who the culprit is on that one that's making that request. Of course, we love that, and that is Tom G. And Tom is wondering how low can Rigetti get? Today may be the bottom. Today is going to go ahead and form a TD9 count bottom pattern. Yes, there's an A to B equals CD pattern to the downside. My recollection is it was not confirmed with volume, not that it has to be. And that has a 1-to-1 price objective of right about 2055. But you got a TD9 count bottom that's going to go ahead and form today. What I will do, because so many people do trade this, is during the next break, I will go ahead and open up the multi-time frame set of charts that we can use for stocks, because we use different time frames than we do for the future contracts out there. And we'll just see if this is going to be a bottom today. We will see some bottom signals, or should see some bottom signals on those intraday charts. A reason to think that today would be the TD9 count bottom is the weekly, which has a Rhodes momentum indicator top, has tested and rejected profile support, and that was at 23.21 out there. So to the short side should have ended either now or on Monday. And right now, until we open up those intraday charts, hard to make that call. It's looking like it's actually right now. So we'll leave that. We'll go out to our next request out here. Next request is for NVIDIA. So let's go take an NVDA, see what that is doing. It is trading as we speak right now at 189.66. And what did it do this morning? You know, if I didn't say, you should really know the Rhodes momentum indicator pattern, the TD9 counts, okay, the A to B equals CD pattern out there. You really want to understand these profiles and get access to them. Of course, you can have access to them because stock charts like NVIDIA, all the popular ones, I provide those profile levels every single day inside the newsletter. That's another easy way for you to take advantage of that. Now, in the case of NVIDIA, what did it do this morning? It got down into its buy zone, that buy zone between 180.30 and 183.85. So it's tested and rejected that level. It's just a consolidation with inside its profile. It looks to me, because it's a bullish structured profile, wants to make a run for 194.48, the top of that profile. Weekly time frame chart has a Rhodes momentum indicator top. Price is above the top of its profile out there. If it can close above that level being 189.39, we're at 189.88 right now. That signal will be neutral. The monthly chart right now has a dark cloud cover candle that would confirm a Rhodes momentum indicator top, but it's only the 14th of the month, and that means it's too early to call. Let's go take a look at XPEV. This is for GTE. Let's go see what this is trading out at. It's trading out at $25.77. So what do we have here? Today has confirmed at this moment in time a Rhodes momentum indicator top because of the gap to the downside. If price were to rally and get up to 26.23, that pattern would go away. Now, price, let's say it's got the Rhodes momentum indicator top. Price pulled back and tested its green oscillator and change line. Bullish signal. Traded above the top of its daily profile. Let me just confirm that. 25.49 it is. So it has a neutral signal for the daily time frame at this moment. The weekly time frame still maintains its TD9 count top. In order to negate that signal, you need to see a weekly close above 27.16, and the monthly chart is just taking its P's and Q's from the daily and the weekly. So GT, I hope that helps you out. We had a question about this coming in from Tom C. And Tom is asking, is there any possibility that next year won't be a bear market? It's an interesting question. And he's saying based upon the 4-year seasonal cycle out there. So how are we going to answer that? Well, first, what I did here, Tom, was I pulled open my seasonal set of charts out there, hoping and praying that it had a 4-year seasonal chart. It does not. With regard to other filters, it does. It's got the election stuff. It's got the year of the election, the post-election, the pre-election, the midterms. It's got all that stuff. We got 2-year cycles, not a 4-year, for even years. So that means I'm going to have to manually go through and take a look at each of these things. But you were under the assumption that the Dow or the S&P 500 would form a bear market next year. So the other thing that I need to do or would want to do is open up my yearly set of charts, but that's going to consume a lot of resources. So I don't want to do that just yet. And that question, Tom, what I will do is I will produce some charts over the weekend. So tune in on Monday, and I'll share those charts with you. We'll take a look at the 4-year cycle. I'm going to answer your question, though, about the bear market. You're making an assumption, and that might not be a great assumption, and I'll share with you why as soon as we get back from this break. Steve Rhodes with TFNN.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Hey, it's already Monday. We don't have to wait. What I was able to do here, I took the 2-day cycle, 2-year cycle that the folks at SeasonX have on their charts out here, and I just went ahead and got rid of the, every other year out there, if you will. So here we've got a 4-year cycle with 2024 being that cycle. I can't go back and take a look at the message. I think you were looking at, you had listed 2018 out there. So I've got this at 2016, 2020, 2024. So now we're kind of, which 4-year cycle are we dealing with out here? Which year? Where's your starting point? In any event out here, this is over 128 years. It's got 42 data points, and this is using the Dow, by the way. So that's the where I've got the largest number of data out there. And so that's the seasonal pattern that's associated with it. It's just kind of interesting. It has almost no relevance right now to us because we're certainly not in that pattern as we speak. But the question is the bear market. And Tom put that out there, and the assumption was based upon a 4-year cycle. I don't buy into that. I've gone back, and I've shared this with you many times. I've gone back and studied every single, not everyone, but every single one, every single bear market on a Dow chart. And they all have one thing in common. And that one thing in common is they have a topping pattern on the daily, a topping pattern on the weekly, and a topping pattern on the monthly. Mostly, it's Rhodes momentum indicator signals. And that makes a lot of sense because that's when the market really gets stretched. That's what that pattern is telling us. So let's take a look at the, and do I know what 2026 is going to look like? No, but where are we at right now? We've got a Rhodes momentum indicator signal on the monthly time frame chart. We don't have any kind of topping pattern. There's no bearish reversal candle. We've seen a higher high and a higher low out there, just like we've seen for the most part on a monthly basis out here. The exception right now being the month of August in 2025. Still ended up seeing a higher high out there. No topping pattern in place for the monthly time frame chart. Let's look at the weekly time frame chart. The weekly time frame chart, no topping pattern either. It's got 2 different A to B equals CD patterns. To the upside, it negated its wave number 7 signal. That was letter G. There's no topping pattern on a weekly time frame from the Dow. Yeah, I know it's down 1,000 points or what have you today. Forget about the points. That's not as significant as percentages. But what's more significant is support and resistance and bottoming and topping signals out there. The daily time frame for the Dow negated its TD9 count top. That had formed out here on October 29th. That was negated on the November 12th out there. And so what we've got now, what is it, a little 2-day pullback? All we have to do is open up the daily time frame charts up here and take a look at the pullbacks or retracements that we get, and they're typically between 2 and 4 days. We have had, in the case of the Dow Jones, it has had a couple of 5-day moves to the downside. This is just normal behavior that we're seeing out here inside the stock market. When it gets unnormal or abnormal, we'll take a look at it. But I disagree with the belief at this moment in time. Well, here's what I can share with you. We're not in any kind of bear market. The charts right now do not even, right now, forget about 2026 out here. There's a lot of people that believe in 2025 that the bear market has started right now. If it has, then all of those years with bear markets, this is going to be the first one where we're not going to have topping patterns for the daily, the weekly, and the monthly time frame at the same time. What I will do over the weekend is I will open up my yearly chart so we can go take a look at that. I believe that might even be in bar 8 or bar 9 possibly, but we'll take a look at that, and we'll do that on Monday. So let's go to the next request out here, and thanks for the question, Tom. Appreciate it. Let's go take a look at PGEN. This is for Dan inside the Tiger's Den. That is, I believe, this chart right here. It is. So we take a look at this. Having a stellar day. Having a pretty good week, but the day is better than the week. Why? Because the weekly hasn't taken out its swing point, this shooting star candle. I don't know if that was a sell the D point top. It most certainly was. So you got to sell the D point top on the weekly time frame. That was established by that bearish shooting star candle on September the 5th. Now, price is trading inside that swing point. 31 million shares that week. This week so far, 22 million shares. So price is moving higher on a weekly basis. Unfortunately, it's doing it with lighter volume. Now, what you really don't want it to do, you'd like it to stay right here. In fact, you should start selling it so it keeps it below the price point of this sell the D point top, which is 523 out there. Because if you test and reject it, get above it, close back below it. On a weekly basis, you're going to test and reject a swing point with lighter volume out there. Now, it may not be too bad because prices trade above the screen oscillator and change line and the top of its profile at 448, but you'd still have a failure. You don't want a failure. You want something like the daily time frame chart. The daily time frame chart, no failure here. You're negating a TD9 count top, which has triggered an A to B equals CD pattern to the upside. However, just like the weekly chart, which has a Rhodes momentum indicator top, that had a sell the D point top, it had a shooting star. The daily time frame also has a shooting star candle, and that's confirming a Rhodes momentum indicator top. The volume there was 9.3 million shares. Today, you're up with 8.3, so you're moving into it with volume. You'd really love to see this not go ahead and, well, in this case here, on the daily time frame, even if it tests 523 and gets above it and closes back below that level out there, it would still tell you about another run for that high. But you know, Obi-Wan always liked it when, especially a situation like this, you'd love it to just not get to that swing point, have the weekend to recharge itself, because it's been a heck of a move today out there, so that it go ahead and take on those levels. And then when it does that, it will then trigger a ginormous A to B equals CD pattern to the upside. What do you mean ginormous, Stevie? Well, just take a look at it like this, and we go back far enough. Here's what the A to B equals CD pattern would look like for this instrument out here. So we're going to start with the low that came in. This is a weekly chart, December 20th, must have been last year. And we go all the way up to that shooting star. And I'm just simply going to grab this and take this and put that to the C point. There we go. And that C point gets you to right about here. And where that would take it to is $7.59 or something like that. So, you know, it's looking good, but the ideal pattern is to camp out below that swing point, rest up, and restart its engines again come Monday morning. So that's what we see with regard to PGEN. Hey, congrats on that trade, Dan. Let's go take a look at TMC. This for LB. Momentarily, we'll have that set of charts up on our screen. TMC trading out right now at 504. So what we don't like here is really a lot of things. Daily time frame looks horrible. Trading below profile support, trading below its TD9 count breakout level. It has another breakout level that's also trading below. It's not showing up on my screen, but if it closes the day below 506, we're at 505 right now, it'll negate a second TD9 count breakout area. That's all suggesting then that what the weekly chart wants to do, because we are trading below its bullish structured weekly profile, is go target its breakout level of support, and that's at $3.93. Now, the monthly is got a TD9 count topping pattern, and it wants to at least test its oscillator and change line. So it wants to go gunning for 460. If it's gunning for 460 out there, you know, then the next stop would be 406. And below 406, then we get to the 393 level. But right now, the daily time frame doesn't look good at all. Nor does the weekly, quite frankly. Nor does the monthly. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I'm going to just beg for forgiveness here. I forgot to go to those intraday charts for Rigetti out here. I'm pulling those up now. So what we're looking for here is, because of the daily TD9 count bottom, because the weekly got back to profile support at 23.21, what we're looking for are the intraday charts to suggest there's a bottom. And so, Tom, in this case here, if we find that, which we are, I'm suggesting that maybe you do this for more than just a day trade out there, but you do what you got to do. So if you take a look at the 195-minute chart, there's 295-minute bars in a day. We're completing a TD9 count pattern right now. That should lead to a rally towards 28.97. The 130-minute time frame chart, there's 330-minute bars in a day. We use equally time frame bars. That way we're comparing apples to apples, bars to bars. And I love bars. And in this case here, TD9 count bottom, if price can close above its oscillator and change line, really good chance that it's going to continue its rally. The oscillator and change line is at 26.64. We've got a Rhodes momentum indicator bottom on the 65-minute time frame chart, the 30-minute time frame chart, and we've got a TD9 count bottom pattern on the 15-minute time frame chart. 15 minutes says 28.72, 29.48 on the 30-minute, 30.53 on the 65-minute, 32.18. Those are all TD9 count breakdown resistance levels. So if you're asking me, has RGTI formed a bottom today? The answer is yes. Doesn't mean that it will necessarily hold, but we got all the signals that support that RGTI has formed a bottom. So I do hope that helps everybody out inside the Tiger's Den, everybody listening in on YouTube, and especially for Tom G, who wrote in and asked the question. Now, let's get to a couple more requests that we have out here. GT wants to take a look at the Hang Seng. The Hang Seng did form a Rhodes momentum. I sell the D-point top last night. So you can see it's got that bear separating line candle. You can see the A to B equals CD pattern. And what I'd say here, GT, is price closed just below, and I do mean just below, its oscillator and change line. Oscillator and change line is at 26.588. The close is 26.572. So it's uncertain. What price should do, it should at least retrace further. It should retrace for 2 to 4 sessions out there, but it's really kind of sitting at support. Well, what's the weekly chart? The weekly chart shows that we still have a Rhodes momentum indicator top. We're priced below its oscillator and change line. The monthly chart still shows the TD9 count pattern. It shows that that's going to complete this month. It shows that that's completing that trend line. So it looks to me like the Hang Seng is really getting ready to move to the downside out there. The daily time frame chart, again, watch that oscillator and change line Sunday night. We continue to trade below that. Expect it to be at least a 2 to 4 day retracement, with today being day number 1. So hope that helps you out. Duncan Steve inside the Tiger's Den wants to go look at PALI. So let's pull that chart up on our screen. PALI trading out at 209, and with inside its daily profile, it has a bit of a buy zone between 182 and 192, and it's got resistance up at the 214 level. Let's pull this back here, this weekly time frame chart. So the weekly time frame chart, you like this, Steve-O, because prices traded above $1.96, which was the TD9 count breakdown resistance level. So I don't know where it's going to end the day, but I do hope above that. But I also really hope, if you are long this, that it closed the day above the top of its weekly profile. And that number is at 211. We're trading at 209. So ideally, what you'd love to see is a close above 214, because then you'd have both the that stands. Oh, sorry about that. Okay. Didn't mean to. In any event, what you'd really like to see here, Dan, is a close above 214. You'd like to see it take out both sets of profiles at one time, and that would be a beautiful thing out there. Looks pretty strong. You know, it's had this 1 week pullback. Is on a weekly basis. The last time it had any kind of real retracement was really 4-day move back here in September, and ever since then, it's been on a nice rally to the upside. So looks like, you know, it's just dealing with that profile resistance level. So you know what it's dealing with. It's also traded into a swing point on a weekly basis at volume of 113 million shares. We're doing it with, whoa, is that right? Yeah, holy shnikes. That had 113 million shares, and this week we've got 15 million shares? That's pretty wild. The swing point on the daily time frame, bottom of 54 million shares, that must be it. That's your issue, and 1.7 today. Wow, you're really up against some, quite a swing point area. In any event, that's what we see with regard to PALI. You're asking out of big interest. Okay, well, it's a team. That was a Duncan Dan A to B equals CD team out there. I'm not even going to say who asked for Ford, but somebody did ask for Ford. I think it is the Dan Duncan team out there. Let's take a look at Ford. What is it doing? So it's got a TD9 count top. You can see that in the daily time frame. Takes price back to support. Actually closed just below it, which was 1285. Got back above it the next trading session, and it continued its rally. Now, yesterday closed below the oscillator and change line. We're trading below it now. It's lost its momentum, but still trading above the top of its profile. It's sort of neutral-ish. We look at the weekly time frame chart. Weekly time change chart is all out bullish. A to B equals CD pattern that I can visually see out there. Let's just see if it's even attained the 1-to-1 level. We'll start down here back in April 11th. We'll get up to the point that says, I don't know, that's a big enough retracement. So I'm going to go right here. We're just going to move that over to the C point, the next lowest low that takes place after that high. And then that gives us our C to D leg out there. That's got about 1422 written on it. So that's its target. Nothing on the weekly chart to say that's not going to happen. The monthly chart is just consolidated with inside its profile. And so for Ford out there, the key level of resistance on a closing basis, 1350. Needs to close above 1350. And then the monthly chart will be nice and bullish with price above profile resistance and its oscillator and change line. So you got the daily TD9 count top, may have found support and may have bottomed out there. The weekly doesn't have a top. The daily doesn't have a top. The monthly doesn't have a top. It's just dealing with resistance. Okay. So I've been through, I think, everything. Let me just check my phone, my email system here. We got just about a minute. I want to make sure that I do get to all the requests. And the answer there is, I see one here from Eddie. I think we've bottomed for the remainder of the year. So, and can we take a look at Apple? Let's take a look at Apple, AAPL. While that is pulling up, I'm going to go pull up I'm going to pull up the S&P now. Let me pull up the S&P 500. and we're going to go for the last 25 years. I'm going to pull this over. This is the seasonal chart. And while the Apple charts are populating here. So, Eddie, when we take a look at the seasonal chart suggests it really is that we're in a consolidating pattern out here. And we can say most certainly the way that this week has traded, this has come true. This says that we consolidate sideways. We have a two-way market, and that the next real low may not take place until November 9th. So we could be in a choppy condition right now. That low on November 19th, should we actually get a low or a bottom then I could say that, yeah, that most likely is the bottom for the year. But we already caught the bottom for the year, right? The bottom for the year came in on October the 10th when that moved to the downside out there. That is what we believe is the bottom. That October 10th level is held up for almost all indices out there. I think it might have been might be the Russell. That's the one that is throwing a monkey wrench into it. So with regard to, I don't know the answer to your question, but I just shared with you what the seasonal pattern is. And if you take a look at Apple right now, Apple has a wave number 7 top out there on its daily time frame, on its weekly time frame. Negated its monthly TD9 count top. We'll be right back. We'll finish out Apple and take a look at the intraday charts for the NQs.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
So we're looking at the charts here for Apple. Apple is trading into its swing point, its wave number 7 swing point that formed on October 31st. 86 million shares traded hands that day. So far in over 2 hours of trading, we're at 13 million, so we're coming in with lighter volume out there. Next resistance level is about the 275.61 area, but we're trading above profile resistance. That's a bullish signal. The weekly time frame out here just needs to tick above the high from 2 weeks ago, October 31st. Again, that high 277.32 to negate its wave number 7 signal out there, and the monthly is it's no topping pattern. Wants to continue to move higher. Just waiting on the daily and the weekly to catch up. The weekly also negated a TD9 count topping pattern the week of October 24. So Apple looks pretty good out there. Let's take a quick peek here at the XLK. See if I can find it. Did I put it right? Where did I put it? Did I put it here? There we go. So the XLK, this is for Jay. Jay, the XLK, which got that TD9 count top, this morning pulls back, tests and rejects that breakout level. That's where it also formed that hammer candle on November the 7th. Pretty strong bottom. Now, what you'd love to see it do today is actually get back inside its profile. To do that, you need to see it close above 290.65. And if you do that, then the weekly's going to, which has a TD9 count top, will then close above the top of its weekly profile, 291.04. If it does that, that signal gets completely neutralized. Monthly time frame does not have a top out here at this moment in time, and it found support. I'd stay with the XLK. That was your question. Now let's go see what the intraday charts. They might have a different opinion out here. Do they? And the answer to that question is no, they do not. The 2-hour time frame chart, negating the area where a counter trend move would come to an end, that suggests it wants to run up to 25,344. We're trading above the oscillator and change line on the 4 and 5 hour charts. Those are bullish signals. 25,571, 25,513 are numbers there. The 60-minute time frame chart's taken out its breakdown level. 30-minute chart's only in bar number 5. The 15-minute chart completed at TD9 count bottom. That pattern gets negated with a 15-minute bar close above 25,268 and a quarter out there. That's the markets, folks. Thanks for all your assistance this week. I want you to have a fabulous Friday, a wonderful weekend, a magical Monday. Join me again at 11 o'clock in the morning on Monday. Be safe out there. Take care. Have a great weekend.